What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for April 6, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, today we had the PMI, and it looks like the recession numbers are starting to show. And so we got quite a bit of a scare this morning. Western Alliance also, I guess, had some data this morning as well. They have since released numbers since this morning, this afternoon. That's kind of why we got a bit of a pop. But what is really concerning, not only are we in a banking crisis, not only do we have the OPEC issues that are currently going on, but we have to understand there's something really unusual going on as well that I didn't really think about. And something I've been talking about is that we have non-farms on Friday, but the market is closed on Friday. Now, typically on short weeks, non-farms are pushed to the following week. So the fact that we are still releasing non-farms on essentially a day in which the market is closed is very interesting and very eerie, because of the fact that we've seen some crazy, ridiculous numbers accounted for non-farms, and so much so it's blown expectations completely out of the water. Now, what if, for instance, we come way under expectations? That could severely start driving panic and fear that we could get in a recession. And something I've been talking about is that once we start actually realizing that we are in a recession, that will start getting priced in, and that could drop the market. That could get us the crash that we've been looking for, whether because it's not coming from the banking crisis that's been extremely quiet front. But you have to also understand something I talked about, like the banking crisis is cascading other issues. There's massive layoffs going left and right. Their CEO is just randomly up and quitting. I mean, it is absolutely just crazy what's going on out there. And this is what I talk about, the reality of the situation meeting this utopic picture. Now, once this starts happening and these true data sets start actually depicting what's going on, the market's going to start correcting. And once that recession starts getting quote unquote priced in, that's when you get your drop. And so we have to be very careful. We're on edge. Also, the odds of a recession in July are up like 97%, which is just absurd and crazy that all of a sudden this came out of nowhere, right? Like, I'm pretty sure we've been in a recession for quite a while. It just hasn't all of a sudden come. But this is what I talk about. Where reality, this is what you're going to see is if we do get a quote unquote recession, how they define a recession, this thing is going to get priced in, and you'll see what a price in for a recession looks like. And it is going to get very nasty. And so, again, we've been waiting for a catalyst. We're starting to get it. And I said I didn't know when or where it would come from. We had big events that could cause it, but the banking crisis got too quiet, right? It didn't draw enough fear, and OPEC didn't draw enough fear. And so now we have the potential of getting recession numbers. And now we start talking about recession. We're in recession, potentially depression. That's when we start correcting. That's when rates can start getting cut, right? We need a catalyst. And like I said, over the past couple weeks, we've had multiple catalysts that it could have been, and just they haven't played out. And it's not saying that they aren't, but they haven't so much so made themselves headline news. Once they start making themselves headline news, then and it starts being impactful, right? When people start seeing it happen around them, then it starts to have a big play on the markets. So as of right now, that is currently where we're sitting at. It's a very interesting spot. Moving forward, where we go from here. So if the non-farms come in really bad on Friday, that could be extremely eye-opening, I think, and potentially move the market, right? Even more so than the core next week. And now everything is just so sensitive on what's going on, right? You got a banking crisis, you got OPEC, you got all these numbers that are coming in showing that we are in a recession, potential huge cuts. What if we get huge cuts released on Friday when the market is closed? Imagine the drop that could potentially happen come Monday morning. And then if core starts going back to high, it's going to be more of a problem. I'm not expecting it to. I think it's going to start coming down a little bit. But again, really just depends. Those numbers that we're going to get for oil and stuff, that's not really going to be impactful until the next core. So you're not going to see that until the May report. So there's too much going on. This is what I talked about. In a normal market, you have like one thing at a time you're dealing with, maybe two, but it's not quite as impactful, right? It's something that you could essentially deal with. It's not that big of a deal, but the fact that we have so much going on right now, that these issues are big and critical, that we haven't had a huge down cycle in over a decade, right? You need these big down cycles in a decade, once in a decade, right? And we haven't gotten that in over a decade. We've just been free money, and this is the outcome of it, right? And it's going to be bigger and nastier than we actually thought. And what we saw last year wasn't even right. That's just part of it. It's just the beginning of it, right? Into what we could potentially see. So, and normally the drop could be big. We'll see. I'm still really aiming towards that normalization, that 3,200 mark. And then that's where we're headed, somewhere around there. Whether even we drop down to 28, I mean, you could go a little bit deeper. Again, it depends on the timing of everything. It is what matters, and that's what you have to understand is once we get that big move, if we get that big move, that will be the thing that that essentially prices everything in at that point. But it needs to be a big move, a big crash like move for that to happen. I'm not saying it has to happen, but again, in my opinion, is that has to happen, has to occur for Powell to start cutting rates, for things to start shifting. It's not going to say we're going to explode right out of that, but it's saying that that would be enough of a move that we would be okay. That if something else happened after that fact, you've pretty much already hit rock bottom. So essentially, at that point, the only other way to go is up, right? We haven't really done that. We've just chopped down for a year. That's nothing, right? Like the bigger move is about ready to happen. What I've talked about is you are in the final stage. We're starting to see stuff break, and it's happening almost every other week. Something big is happening. That's what you need to understand. We're like right on the cusp of something big, this final stage playing out, whatever that's going to be, whether that's going to be non-farms coming in dramatically lower than we thought they were, right? Because we've had this growth recession that we've quote unquote been in, to bank crises, to OPEC, to BRICS is another one for the dollar. There's just so much going on right now. And the reason the BRICS is such highlighted, BRICS has been around forever, right? BRICS has been around for a long time, but the way it's making headline news now is because of the fact that things are in a very, very weak state. And if any other country was going to be able to take advantage of it, it would be right now. But it's still, I think, very much in the U.S.'s court to be able to allow that transition to happen. If we, if we lag behind on addressing BRICS and doing something about BRICS, and putting more regulations on them, more sanctions, whatever the case is, if we don't start doing that now, it could potentially happen. But again, people will gravitate more towards the U.S. dollar because it's safer, right? They believe in U.S. More countries just don't believe in China or the U.S. or Russia, right? And so it's harder for them. Like, you got a lot more corrupt countries that people aren't going to put their money in, right? They ain't going to put their value in those type of things. So as of right now, the U.S. dollar is still kind of the safe haven. But with all that being said, it's not saying that we're too big to fail. We can always fail, but I think you need a bigger catalyst for that to happen. And whether they use commodities to back their currency, whatever the case is, we will see. I mean, you can feed into it as much as you want. In my opinion, on that front, I just don't see it happening. But to each their own. However you think it's going to happen. Again, we have to have some kind of structure, and so because I just think the society as a general needs structure, right? Like, it wants to be guided, it needs structure. Not to say that structure is the greatest, but it needs it to some extent. So, with that being said, where do we go from here? So right now, what I'm more concerned about is what's happening with non-farms on Friday, and the fact that they're still going through with putting out non-farms on a down market day. So we will see what happens, and then we'll go from there. But as of right now, like I said, we sold off pretty heavy this morning. Banks leading the way. Tech, heavy selling in tech. We'll see if that continues tomorrow. Again, we want to hold so essentially the 40.74 tomorrow. We're almost made it all the way back up to open today. We still got about 10 more minutes before that happens. But if you want this thing to continue up, we need to break back over the 401. Like I've always stated, if you break a level, normally you're going to break it, retest, and then dump more. So we'll see what happens tomorrow again, going from that point. Bitcoin, again, still holding strong at the 28K mark. We'll see again, it needs to break up over 29K for this thing to really break out. And again, it's going to be tested, right? Like you want this thing battle tested. If you really want it to decouple, it needs to be battle tested. Right now, we haven't been in a state to be battle tested. Right, like we need recession fears. We need something to crash the market, and then if Bitcoin stands alone, well, then that's something else. But people are defaulting back to gold as well, so that's something to keep in mind. As gold is been rocketing for quite a while. So gold's been this move is essentially what people have been waiting for since this whole thing got kicked off in the pandemic, but it never happened. Right, it was more so tech was a safe haven and essentially Bitcoin ran up and gold just sat stagnant. Now gold is ripping and has been ripping for a while because of the fears that are going on with everything. So but you have to understand that buying GLD or buying some of these other gold ETFs, right? It's not the same as having gold, right? So nonetheless, we are a stock market channel and we'll just talk about the ETFs. Nonetheless, so see what happens with Bitcoin again. I think it's still too tied to the market. It's not going to uncouple here for a while, at least not till we get closer to the next halving. Now, if we look at Tesla sold off heavy today. It's actually had some pretty heavy selling days. We'll see if we can continue. I still think we're going to at least hit the 177. I think that's going to break, and we're still going to eventually get to the point where we get to 140. Again, it really depends on how these next events start unfolding. Again, if a bunch of them start unfolding at one time, that could lead to a lot of sell pressure. And so that's what I'm talking about. Timing is we have to really see if it's just one big event that just causes the fear, and then everything comes crashing down, and then crashing down enough when we start recovering from that point. If something else happens, it happens, and that'll take down the market for not as a big of an extent, right? And so it's if everything starts happening like the banks go over, more banks go under, get really bad non-farms. It's recession. We are in recession, but it's not actually recession, depression, and then all this news starts offloading at one time, right? Like it's just going to keep feeling the fear, and then that in itself will cause the market to sell so much so fast that it's not going to matter, right? And so that's what I'm trying to wait for and wait to take advantage of. But Tesla. For the bears, it's good to see the weakness in Tesla. This was the safe haven, right? Because banks and because of the banking crisis, everybody soaked their money in. This is essentially when the banking crisis, started getting kicked off, and tech just started carrying everything because the safe havens were dying. BA, the values plays have been holding really well too, but we're starting to see a lot of things turn over now. So Tesla being a big one of them. Like I was just talking about, BA started to get some selling again today. We'll see if this continues. Again, it needs to break out the 220. It's been sitting at 220 forever, right? Like this thing finally needs to start breaking down and coming down. We are getting an earnings, so we'll get some more exposure into what's going on there. JPM, really weak, but it's still, I think, again, my opinion still needs to really recorrect back down to 112, 110. But we'll see what happens there as well. But aside from that, it's GS. Like I said, it's corrected enough. Like you can make a bull case out of this, but again, essentially the banks are just in a sensitive state. So for them to really start pushing up, you need something bigger to change. Like as soon as we get an official pivot, not just guesstimating in a pivot and whatever the case is, and that we've essentially priced everything in. You haven't priced in a recession. You have to understand that is not priced in. Because all you hear is soft landing, or a no landing. There is no pricing for a recession, right? Like that hasn't even occurred yet. And once that occurs, going to get a nasty move. And that's what I am anticipating, and that's what I'm waiting for. At that point, I would be more apt to be on the bullish side of everything once everything's crash. And some of this, you offload some of this bad information, this bad stuff that's currently going down. I think it'll be as far as the economy is concerned, the market will recover way before the economy will. But you have to understand, like, some of the stuff just isn't priced in, right? Like, people think it's priced in, it's not. Yeah, we've come down a lot, but you have to understand, when we went into that move over the last 3 years, or not last year, but the last 2 years previous before that, we had a huge move, and we have to correct that and normalize. It has to be normalized, and so to be able to normalize that and correct that, right, you're still looking at 3,200 move down or 2,800 move down. For us to be bullish, for our system to remain bullish, it needs a natural correction. We have to let that happen first. So with all that being said, that's pretty much it. I didn't want to make this video too long. A lot of my videos have been really long lately. There's been a lot of data and news coming out, so the fact that we're actually starting to see the data that we should have expected months ago is actually starting to play out. Again, be interesting to watch and see what happens Friday. So if you made it this far, go ahead and drop a like. Until next time, I'll see you guys later.